All right, super cool. No reason to hold off on a good thing. Honestly, we'll start just a touch early tonight on the Independent Investor Channel live stream. Within the first minute here, I really want to get a couple shout outs out of the way. Super important to acknowledge some phenomenal work that's been offered across the YouTube community. And it's going to start tonight with Gen X Dividend Investor for you guys that haven't caught the How to Become a Millionaire video. There's way too many tidbits in that video for me to try to summarize for you guys. I just recommend that you go and check out the content. I thought it was fantastic. Has really got the power to be life-changing. And content of that quality doesn't need to go unnoticed or unrecognized. So what little part I can play in giving my highest endorsement, it just happened to be one of my favorite videos, if not my favorite video, especially when he talked about his reaction to the stock market, what it's been doling out with the volatility, and talking about how he has a significant lack of, if not no, emotion to his stock portfolio. Knows what he means. It gives a Spock reference in there that's pretty awesome. But all kidding aside, phenomenal content and absolutely worthy of a shout out. And what little bit of boost I can give, I thought it was absolutely phenomenal. It's worth your time to catch that content. It has got the potential to change your life. Second shout out of the night comes tonight for JMac Investing. Jason with JMac Investing had me on personally on Wednesday night, ran a live stream with myself and Jamie with Focus Fire Investing, and just wanted to offer my thanks and give Jason his due call out within the first 5 minutes of the Independent Investor Channel live stream. And just super glad to be with you guys. Honestly, I've been so preoccupied with a lot of other things other than sitting there and crying about spilt milk, which will probably be a lot of the topic tonight, talking about a continued week of volatility in the stock market. It's doesn't really look like it has any type of end in sight with regard to the current geopolitical risk in the market. However, what I've been able to see a little bit and take advantage of, you guys will be interested to know a little bit of some of the defensive moves that I'm taking, or really I had prepared before this volatility kicked up. It's something that I kind of try to keep in my back pocket, at least as many backup plans as I possibly can when stuff like this happens. Certainly as transparent as I can possibly be. I know there's a lot of beginning investors out there that are probably not having very much fun right now in the investing landscape, and it's totally understandable to an extent. You don't need to allow your reaction to the stock market govern your opinion about whether or not you should or should not be investing. Okay, the answer is very simple, and I'll help you answer that by saying very simply, yes. And I find that a lot of people, I can't believe how many people are approaching me and they're asking me, hey, how do you like to be an investor now? Or what are you doing about it? And my response is pretty simple. I'm doing the same thing that I've always been doing. I've got the opportunity to look at this market off of its high of 29,400 on the Dow Jones Industrial here, flirting with some level of interesting support at 25. Now, I think that's a psychological level, not even a technical level. You'd have to speak with a technician a lot better than me at reading charts. But certainly the activity today at the end of the stock market close was interesting enough to get my attention. I was pretty near down about $7,100 about 15 minutes to the close and ended up down 2,500. So we took a $5,000, I will repeat, $5,000 swing in 15 minutes. So investing certainly is not for the faint of heart, but I would ask everybody to keep some level of relative perspective on what's going on right now. And if you're looking to make sense of this for your portfolio specifically, Be one detail that I would encourage each and every one of you guys not to focus on, and that is, in fact, the money. If you want to focus on a whole lot of different things like the fundamentals of a company, and you want to learn a little bit more about looking at the balance sheets, looking at trying to get a hold of the best quality of quality, there are some deals right now. I'm going to go over some of the strategic buys that I've made just using the information that's in front of me, just like it's in front of you. And that is, we're off about 4,000 points. Okay. I'm not one of those folks that says, hey, I'm going to start buying it down 20%. I'm just not like that. I'm more of a realist in that I'm acknowledging that right now we're down about 13%. All right. Could it go lower? Sure. Could it rebound? Yes, it could. But anybody who forecasts that they know the direction of the market probably needs to check their compass and recalibrate what their expectations are in the stock market. Okay. It's not one of those gigs that you're going to need to play around with and think that you can just call a bottom in. As a matter of fact, this is probably one of the most volatile couple weeks that I've ever seen in the market. With that said, I do anticipate that there will be many, many more over the course of my lifetime as the investing landscape has changed so radically, with the ability of people just to pick up this device right here and initiate a sell order within a couple seconds. Probably adds a little bit to it. And then when you introduce the quantitative algorithmic trading that goes on when certain triggers are met in the market, you have to imagine that a lot of these transactions are happening without human interaction, which can happen in a split second, to be honest with you. So I think some of the exacerbated buying and selling is actually just made a little bit more intense by those factors that are now something that are going to become commonplace in the market. So if you're new to the investing realm, perhaps maybe you won't know any different, and perhaps maybe it's something that will seem commonplace to you. But here's the thing: you really need to take a step back at some point and ask yourself where you are realistically in your program. And before I came on live stream tonight, decided to take a little bit of a review over the portfolios. Quite frankly, I've been actually working pretty hard to monitor this activity. It's been intriguing enough to me. And I'm also in the Gen X dividend investor camp of really being kind of emotionless. I don't know if I am weird. I'm not really sure. It is somewhat abnormal based on what everybody else is seemingly wanting to chalk the stock market up as being an absolute disaster. I see it a little bit differently. I just think we're going through some geopolitical risk right now and some potential systemic risk to a lot of different companies where we just don't know where this is going to shake out and how it's going to affect the bottom line of a lot of these companies. Okay. With that said, what's really changed with your program? What has really changed over the last couple weeks with your investing goals? What has really changed in your portfolio? I can tell you my portfolio over the last couple weeks has actually gotten stronger. Okay. How's yours? Ask those questions. Ask those questions with the intent of giving yourself the opportunity to self-assess. I think that's the important key takeaway. And the more you can evaluate, not over scrutinize, but give some constructive, objective criticism to yourself with regard to the plan you put in motion some 2 months ago when the year started, and we just came off of record highs, a great holiday season. Why is the plan any different now coming into March than it was then? I would contend that it probably is not. All right. And for new investors, it's really difficult to understand the potential of how volatile the market it can get until it gets there. And then typically you're given somewhat of a rude awakening as to what the stock market can dole out in a very short amount of time. In my experience, it always seems that The selling happens a lot faster than the appreciation. And I just think that that's something that we're going to have to get used to as a tribe of investors that we are. But make no mistake about it, your cooperation and involvement in this group really does help to maybe re-emphasize, maybe help you focus on an area of your total overall financial picture that may be a heck of a lot more important to be focusing on at this point rather than the red in your portfolio. Nobody's immune to it. There's nobody out there that's circumventing the sea of red right now in the stock market. That I can promise you. If they tell you any different, they're lying. They're lying. All right. I think the opportunity with investing is just an absolutely wonderful thing. And I say that now with all certainty. But here's the thing. I am very, very acceptive of both conditions that the stock market can dole out from year in and year out. I've been doing this a long, long time. And that's the beauty of it. If you are a new investor and you've got less than 10 years in the market, the support that you can receive from this group is absolutely without question. It really will help you streamline the mental barriers that do exist for new investors, to where you just might feel like throwing in the towel. And sometimes that temptation is a little bit more than what a new investor can overcome. And I tell you what, it's going to feel good right away when you hit that sell button. And then that feel good is going to slowly dissipate. And then you're really going to start to regret it, especially when you look back and you say, wow, all I really had to do through that is stop worrying all the time and focusing on investing. Remember how I talk about how shallow of a topic investing really can be? And a lot of people rationalize it in this way. If you're an investor and you have less than $10,000, and let's say you're off $2,000, let's say you're down 20% right now, I think some of the dangerous deliberation that people go through is they start to justify all the things that they could buy with $2,000 instead of just seeing it evaporate in the stock market for no gain. All right. I would contend that the gain that is absolutely realized is the opportunity to stay invested and remain invested through volatility. Teach yourself that you can put a plan and a program in place and weather volatile storms. But here's a twist. Really want you guys to understand. I did a review of the big portfolios. I'm down about 18,000 right here on the three big investing accounts. Not too shabby. There's a silver lining to that I'll get into later on in the live stream tonight. I'll get a little bit more in depth on playing the same deliberation game with that 18,000. I could buy a modest car with 18,000. So I lost a car over the last couple of weeks. Here's the danger in thinking that way. All right. It speaks to an avenue of your life that is specific to investing that at the current juncture just isn't quite working out for you. All right. Rationalizing your losses by saying that you could have done so many other things with that money is dangerous. And here's why. There's not a whole lot in your life that you're going to come across that is going to be an asset that is capable of returning true value back to you over the long term. All right. Remember my example of losing out on this car, okay, and just feeling so much better if I were to go out and invest in a depreciating asset like a car, for example, okay? Or think of the number of vacations that you could go on, or think of the amount of food that you could buy at low cost or high cost restaurants out there, right? Think of all the things that you could buy in life. And what I want to try to challenge each and every one of you guys to think about is everything that I've just mentioned, as important as those things are, cars, vacation, treating yourself to eating out every now and then, once those expenditures or luxuries are enjoyed, they're gone. They're gone. Now, a car is going to stick with you for a little bit longer, but I would contend that that, in fact, is racing to zero as quickly as possible. Buy it brand new at $18,000. You're going to roll off $2,000 or $3,000 just off the lot and depreciation, right? So by rationalizing all the losses, the paper losses, I might add, don't mean to scare anybody in the audience. You never lose a dime until you sell, but the paper losses that you guys are focusing in on in your portfolio really should not be the center of your attention. Furthermore, you shouldn't be rationalizing all the things that you're missing out on, okay? By thinking about, wow, think of all the cool things we could have done with that money. Think about all the cool things that we could have bought. Think about all the toys and all the clothes and all the this and all the that and all the this and that. And it becomes very, very self-consuming. Here's the thing. You have one shot at life. One shot. All right. Each and every one of us have a portfolio that's comprised of different makeups to seek out some exposure to the stock market. I get that. But the one thing that we have in common is that every single one of us at some point are going to expire. All right. You want to spend the rest of your life worrying about this shallow topic? Is it not enough for you to do a self-assessment and just be proud that you're one of the few that said, you know what, I want to become an investor, and to seek out those validations for yourself as to why you justify paying yourself first in the form of a stock portfolio? Be proud, okay? Now, I'm not saying that you need to look at your portfolio that's recessed a little bit and on the books it's volatile, it's retracted a bit, right? I'm not saying that you need to look at that and say, wow, I'm so excited about that. I'm not. To be quite honest with you, my emotion in one word is neutral. It really is. And the silver lining that I talk about with regard to the activity over the last couple weeks, I've entered into some positions that I'm absolutely ecstatic about. I've done a double buy on Citigroup this week in the financials, trading at 7.5 times forward earnings. I doubled up my position in Wells Fargo, not trading a whole lot more north of that with a PE of 10. It is the biggest by branch for anybody that's keeping score. And Wells Fargo was one of the stocks that PPCE enrolled out, and I agreed with his assessment. I think it's a phenomenal dividend play, but I'm excited about doubling up that position. You know, I just held the position. I've gained a ton of shares, lowered my cost basis since I've owned it. But here at 36, 38, I think is what it settled out at today. Again, the market swung north really heavy at the end of it today. Excited about the Wells position, certainly. Picked up some Caterpillar today. That was an almost double up position in Caterpillar. So I can sit here and throw single stock at you guys. I added to the Disney position. That was a no-brainer. That was a great one. I added to the 3M position. I'm absolutely building a nice, respectable position in 3M. This may come back to bite me, right? In 2 months, I'll get all the tomato throwers to come on to the Independent Investor channel and be like, ha ha, Ryan, see, you're an idiot. That may be true in the short term. In the short term, okay? These decisions that I'm making now in the short term, I will hold as long as I need to make right decisions. And the longer you're willing to hold, the more your success rate goes up to 100%, basically, right? The only reason that you're going to fail on a short-term decision by taking advantage of some volatility in the stock market is if you choose to hit the sell button. Nobody else. If somebody talks you into or convinces you that the stock market is going to zero, or convinces you that taking advantage of some volatility is not in your best interest, okay? That could very well be right in the short term. In the short term. If you guys are encouraged by my calm demeanor, it's the truth. And that's why I think a lot of people tune into my message, because it is, in fact, the truth. Okay. I have been spending a lot of time increasing my professional position at work. And I'm glad to say that I just hit a great milestone at work. I think it really helps run you through, and I'll run you through my own deliberation of really taking note of what it is in life you really need to be thankful for. And I don't think that we need to be so pathetic that we do this just during times of volatility. These are things that I give thanks for all the time, all the time. So when you're talking to me during times like this of volatility, it certainly helps to appreciate how somebody like myself, who's got quite a few years in the market of experience, really rounds out my perspective on life. Okay. This week in particular, I've taken up a coaching job for my son for soccer. I'm super stoked about that. I'm super thankful for my ability to work in the capacity that I do. I typically don't get into too much detail with regard to how much my employment means to me. And I know there's folks in the community here that feel the same way. I was just rapping with Rebecca with Quest to Fire before the live stream a little bit. And what an awesome way to give back. I don't want to speak for her, but look at the service that she's providing in the healthcare sector. And there's a lot of other people. I just saw my good friend Jared Odell pop in as well. And I think there's really something to be said there, to where when I'm engaged in my craft, what it is that I love to do, guys, I'm not thinking about this at all. My investments are doing their job. I asked my capital to be invested capital, and that's exactly what it's doing. Now, the trick for anybody who's about to tune off to the average watch time on the Independent Investor channel, let me let you in on the greatest secret that you will ever be provided with regard to the investing topic, and especially in the YouTube landscape. I will tell you this. My investing game is a little bit different than most in that I am a self-directed investor. Okay. My portfolio is built of a lot of tax protected and wealth preserved wealth. Make no mistake about it. For those of you who have just perked up your eyebrow in curiosity, what I mean by that is utilizing the tax benefits of a Roth IRA is only part of the battle. It's only part of it. I self-direct my investments. The declaration or the designation over my Roth accounts, I actually have three, one for me, one for my spouse, and one that is sponsored by my employer, are all of a Roth IRA variety. All right. So some of the things that I'm going to talk about with regard to my defensive posturing as we move into some more volatility, if it turns north, I'm going to make a fortune. If it continues down, I'll probably make even more of a fortune by discussing some of those defensive techniques that I'm going to let you guys in on tonight as well. You know me, I don't hold any secrets. This is stuff that I actually do and actually will do once the timing is correct. I just don't think that 13% is a time to really start throwing everything to the fire. I think it's probably a better time to be prudent with our decisions, calculative, and strategic with our positions. These are positions that I had aside, and I was ready to deploy at a moment's notice, and that's exactly what we did. But I think when it comes right down to it, guys, man, perspective is the key in volatile markets like this. And I would employ every single one of you guys to take the perspective that I've taken. Okay. Focusing on those things like diet, exercise, so personal relationships, I think is key. Okay. And you're going to find that the investing slice of your pie is going to become a lot more sharp, but it's also going to become a little bit smaller, okay? Because you're going to know exactly what the stock market has the potential to dole out over the years. And you certainly want to be in that position. At least if I were going to wish everybody in this subscriber group or community that we have, I would wish this one thing. And here it is. When you're 60 years old and you're reflecting back over your life, you can say, yep, there was some volatile times. There certainly was. But man, am I glad I did it. Am I glad that I made the commitment really to myself? I didn't make the commitment for any other reason. I didn't make the commitment because I remembered some YouTube guy, I don't know, the independent something or other, got me excited about the stock market. And then I stopped watching him and I got invested, and I figured it out because he gave away his secrets within the first half hour of his live stream 96. But I think if I was going to wish any success upon the subscriber base, it would be just that. It would be the ability to reflect back on your life with as little regrets as you possibly can have. And I can tell you what, guys, this is the number one regret that I have in speaking to people in their 50s and 60s, is that they wish that they would have done more. And I don't know if that reflective opinion comes from a place of just wanting the potential goods out of that reflection. Like, what I mean by that is it takes some commitment. It takes weathering storms like this. And make no mistake, I will not sugarcoat the volatility. We are going through a storm. We are going through a storm. Okay. But it's your ability to weather that storm and persevere through it. And maybe if you can show a little bit of fortitude to have the ability to actually dabble and try to take a little bit of strategic advantage of this, which I feel is absolutely an oversold condition now on certain names. It may get worse, and it can. All right. But certainly want to keep that long-term perspective. And that right there is what I wish upon each and every one of you guys that have made their way to the channel tonight. Certainly welcome everybody that's new to the Independent Investor channel. I had my most successful live stream last Friday that got demonetized by YouTube. So thank you so much, YouTube, for making this so much more enjoyable for me. Good luck testing my level of devotion to this community. My devotion is not to YouTube, quite frankly, and I say it quite openly all the time. I don't do YouTube for a living. I think if I did choose to do YouTube for a living, I think I would go bananas. Okay. But really kind of ill-timed on the whole thing. And a fourth relook at it had them basically admitting to me that they watched my 2.5-hour video, which I highly doubt, but could provide me no specifics as to why the demonetization was awarded to my video. So awesome news. You were all part of it. So thank you so much. I will tell you that the value in last week's live stream, if you did in fact missed it, started off with one of my good friends, quite frankly, one of the really wonderful members of this community, kind of the glue that holds everybody together, I think, and is All Good. We kicked off the live stream with All Good. She's in the group tonight. Had another half a dozen. Had Matt Money, who's also in the group here tonight, and I had Kyle as well with Passive Income Investor. And that was it was a lot of fun for me, man. It was a great live stream. I reviewed it for my own curiosity, and the content was perfect. I don't put out anything that I'm not proud of. All right, I'm not trying to play on waves of something. So you will test me tonight on a 2-hour live stream. I've got enough vocabulary to where I can go on probably for 6 hours and not mention anything about why the obvious volatility is going on in the stock market, but test me, because you won't hear a word about it tonight. Nice to see everybody. As usual, the way I run this live stream, I'm going to cruise up to the thread. I'll run it myself. I had one guest in here to start, but I have dropped a whole lot of invitations into the start of it. And I will drop one now for anybody interested in kicking on here. I certainly can ramble on for 2 hours. If you guys don't want to listen to me ramble on, you can help me break the monotony a touch. But I've got enough on this topic that I can talk for days. All right. So I'm going to drop an invite in there as well. Then I'm going to cruise up to the top and I'm going to start to acknowledge. So there's the invite. If anybody wants to kick on to the live stream, you're welcome. That's the way that I run this live stream. I typically run it the same way every single Friday. I absolutely try to spread the love with my shout outs and then kind of give an opening synopsis of not only the stock market, but where I feel a lot of people's heads should be. And that is trying to get a hold of a good perspective in the stock market. I think a strong mind will overcome any adversity that the stock market can throw at a savvy investor like myself. And there's a ton of savvy investors in this group as well. So I'm honored to be part of it, and I'm honored to collaborate with anybody who wants to kick in with me. But I'm going to cruise up, and I'm going to start acknowledging some folks here that have made their way into the thread. I'm going to go all the way to the top. I guess a Gen X dividend investor is waiting on the tarmac to take a flight. So the best of luck to dividend Gen X dividend investors taking a flight tonight. Couldn't be with us, but I hope he didn't mind me shouting out that great video. I've got some stock picks here. ExxonMobil was a stock pick that I doubled up on. ExxonMobil. That was an easy decision, honestly. And Wells Fargo is called out. I've already mentioned that. Honeywell is a phenomenal company. And I actually took a little bit bigger holding stake in United Technologies, actually, for your guys' interest. But that's just what I chose. A lot of good opportunity to start some good starting positions into some of these companies that maybe you've been searching out for a while. I think you've got some opportunity here to start some good starting positions and or add to your barometer of the stock market, right? Barometer of the stock market, meaning the S&P 500. I've done the same. I've got a monster share now in the S&P 500. I'm so stoked. Look, man, if it takes me 20 years to get all this money back that I've lost in 2 weeks, I'm speaking tongue in cheek, guys. Okay. But if it takes me 20 years to get this money back, I'll turn it over to my children when I die. So that's my long-term plan. But I've got Focus Fire Investing, who's just popped on. I had a blast with Jamie on Wednesday. I think he probably just wants to continue the party. He didn't take my advice and shave off his mustache, but I'm a little jealous because at 42 years old, I can't grow a mustache like that. But I'll bring Jamie on to kind of help out a little bit with the live stream as well, help me facilitate. And I'd like Jamie to have the opportunity to address the group as well and give another perspective. That's the whole key to this group, guys, is the multiple perspectives you'll get. And I would contend, man, I don't know if there's a whole lot of stuff in this world that I could put my thumb on that you can get this much value free. All we ask is that you spend a little bit of time with us. And if you give us the right shot with an open mind, you might trip and fall and learn a little something. So I'm going to bring Jamie onto the live stream now. I'm going to throw my ears on real quick. Give me a sec, Jamie. I just love these things. Give me a sec. You got me good, man?
Gotcha, brother. Can you hear me?
I hear you perfect. Thanks, man. Thanks for coming out. Appreciate it.
Trying to set myself up here with the phone so I can actually read some comments along the way too.
Yeah, it helps me too, because in this forum, this StreamYard forum, I like to be able to throw some comments up there and kind of involve the community a little bit. I'm sure they probably get tired of me rambling on all the time, but I don't know.
Nah, I'm sure that's why everybody tunes in every Friday. I mean, I think if you weren't interesting, it'd be hard to watch for an hour and a half.
Oh God.
Although you do get pretty spicy by yourself. That's why sometimes I don't tune in here with you, because I feel like I learn more from you when you talk to yourself. I'm being real, like the real Ryan comes out, like the real heart and soul.
I was kind of going back and forth, but I just enjoy this more, and I worry a little bit. I don't script anything anymore. Like I have 10 words written on a piece of paper, and that's kind of what I roll off of, I just think the product is better if you speak from the heart. And if you can't speak from the heart anyway, maybe it's not so genuine anyway,
For real. I think this week has been probably the most interesting week in my entire single stock investing so far. Just being able to actually watch stocks and have the opportunity to jump at an opportunity right now is the whole time in the last, couple of years I've been investing in single stocks only. It's like you just kind of pick one and it goes, and you pick one and it goes. But now, it's the first time I've ever had opportunity to really dive into what's happening in the market and pick specific stocks that are literally 20-30% down. I mean, the video
you
I
get
put out yesterday, you really do. You're watching something, you're like, wow, some of these stocks are down 14-16% in a day, or they open 14% down. And you're like, holy crap, that's the start of this day. What is this going to turn out with? And you kind of get glued to the screen, almost watching it throughout the day, just curious, what's going to happen? Do I wait today? Should I wait a week? You just don't know. It's so up and down right now. I mean, you're kind of sitting on the edge of your seat,
That's the challenge too. And you've heard me say that I think I'll work harder in these markets than I'll ever work when the market's bumping up against all-time highs every day. I mean, that was like riding a wave. I didn't do anything.
Yeah.
It was easy. Definitely. I took a little profit here, whatever, la, la, la. But now I'm really working. And that's the hardest part to quantify. Is at the top of the live stream, I talked about the 18K that I'm down.
Mm-hmm.
But what really gets missed in translation, and the silver lining in that is, I'm down right now if you look at it just in a spot in time, a couple seconds, but look at how much strategic buying I've done. The question is, will that pay off down the line? And how much time will it take for that to pay off? That's the key. So and I don't have an answer for that,
Well, you don't have to have the answers. The thing, even doing what myself and you are doing, which is still putting into simple things like the 401ks, the thrift savings plans, the S&P 500, just buying it on the way down right now is pulling that slingshot back right now. And whenever the market does turn around, you're going to release that puppy and she's going to fly really fast in the opposite direction. But right now it just feels ugly, you're taking it with a little bit of salt, some of that blood in the streets right now, but you're buying it at discounts because what you're talking about, you're like, I don't care if it takes 20 years to get my money back. Looking over my past 10 years of performance within my 401k, you see the amount of money that you put in, and then you see the amount of money that has been gained in your account from just capital appreciation. And at some point, which I was talking about, a few months ago, that threshold crosses to where you say, holy smokes, there's more money in my account. I've put less than 50% now, and it's growing at a faster rate than what I'm putting in there. So, that's where it really gets exciting right now. And for me, this is one of the first years where I'm actually, this is the most I've ever invested. It will be this year. So,
I've taken a look at your program too, Jamie. You're so solid, man. I just don't know if people can truly, truly appreciate how big of a deal that is, self-directed investing. I don't know. I don't have a lot of people come to me in the channel and be like, Ryan, thank you so much for bringing this on. Thank you so much for introducing to me. I validated this to a T. There's folks out there right now that are investing with representation, that are investing in the same stock market that me and you are investing in. So, what gives? What gives? That's hard to quantify how important that is. Yes, I'm down X number of percent, but when this thing rebounds, I don't share any. On the way down, I didn't share any. I keep all of the risk and I keep all of the reward. that I've put into my self-directed program. And again, this is something that I would wish upon anybody in this community that just stumbles and falls in here and is like, what did he just say? I've never heard of that. What the hell is he talking about? What is the difference between self-directed investing and seeking out a manager? You know,
I think it's all about people want instant gratification. I think is where a lot of times people want when they get into the stock market. No matter the gold that you or Gen X or anybody spewls out in their videos, whether it be a golden nugget or not, if they don't see that instant gratification right now, it's hard to accept the value of what you're actually saying. It could be, you know, if you just say invest in a Roth IRA or tax protected accounts, that they're just like, what? And then they move on with their life. But like that by itself, which I've heard pretty much everybody that's, you know, somewhat educated can say that. And if you don't understand what somebody's saying like that, you won't make any action on it. Yeah. But it's almost like looking at like The Rock, like one of these big actors, right? You're like, man, I want what that guy's got. And people think that it was attained overnight, you know, that they want what anybody's got who's got multi-million dollars. That was built over many, many years of hard work. So, you know, instant gratification is definitely a real thing in the stock market.
Hey, Jamie, you stay on here with me. I wanted to bring in the junior stock investor. He's been waiting there, and I've been kind of waiting and giving you your shot, but I want you to stay on here with me. But I wanted to also bring in the junior stock investor as well, because again, I want as many opinions as I can get here tonight, man, on this for the good of the community. Again, the opinions of all these folks. Can you imagine how rich and valuable this information is for new investors that are using the power of social media to come into a forum like this and hear this? Mm-hmm. So junior stock investor, man, I got you. You're on mute right now, but click it over, man. I'd love for you to introduce yourself and let me know, you know, what your thoughts are on the market here in the short term and maybe even long term. Might be a little more interesting for me. Go ahead, man. Now I got you low. Can you turn it up? Got you super low. Do you hear him at all, Jamie?
Nah, I got nothing.
Nah. The audio's low, junior stock. It's all good. I'll give you a little bit of time.
We'll just do these numbers, some gang signs and stuff like that. You know what I'm saying?
Yeah.
Well, we ask him questions and he responds with a facial expression.
No? Yeah. He's a Giants fan, man. He's good. He's cool with me. But tell you what, man, I'll pull you off the stream, man, and let you troubleshoot a little bit. You got me now? See, he hears me.
Yeah, I can't hear.
I can't hear you. Hey, he's all disappointed. That's all good. So hey, so come on with me before the live stream, man, and I'll test this out before. No, it's no problem at all. Take me up on that, man, for sure. But I'll pull you off. And if you troubleshoot it and figure it out, man, I'll pop you back on. It's no worries. But yeah, I just think, man, I would have killed for a group like this. Like when I started, YouTube didn't exist. Okay. I'm old. I get it. But man, can you imagine how cool this is for people to come on and listen to how investors are reacting to this? Yeah. I just find that super useful. It's something that the traditional way of investing is to go and put your money to sleep with a money manager, not think about it, not worry about it, catch a news feed that comes across that scares the hell out of you. You pick up the phone, call your financial advisor and be like, what the hell did you get me into? You know, you
by that time it's moved 20%.
Yeah, man. It's just like times are changing. Yeah. Times are changing with regard to investing opportunity. And this helps so much with what I feel is so much more important than the dollars and cents, which I don't think are that important at all. Quite frankly, I've always contended you should be focused on the share accumulation and your dividend reinvestment program. That really should be where your focus is, but your mind has got to be right. And I said at the top of the stream within the first couple minutes, am I weird?
Yeah.
Is it? Yeah.
Yeah.
It's abnormal, right? Yep. He's still laughing. He's looking forward to his hard drink after the live stream, but he's down 18 grand. He should be unhappy about it. No, I'm not.
Same boat,
Just
same boat. I was at 14.5, I believe, 14.5, and you just kind of, and
yeah.
you're like, it'll come back, who knows the time frame, but it'll
I
come
don't know.
back. And it's one of those things, if you take it too serious, you might hurt yourself, you can't think about it too long. So,
I
but
think if it comes to that point, I would love to be able to say the right thing, to at least have people ask themselves, look, am I ready for this? Do I
yeah,
have do I have some buffer? Because here's the thing, I don't know, maybe I would feel a little bit different if I didn't take the approach that I take, and that is I insist upon a buffer. I insist
definitely.
upon it. And now I don't know. I haven't had one person come back and say, actually, I've had a couple be like, I know you had a lot of cash on the side, Ryan. What are you doing with it? And it's like, well, that's my business. I'm sharing it on the live stream,
Yeah,
you
for sure.
know, but a lot of people were like, yeah, that's cash is going to kill you. I just disagree. I keep those two pillars completely separate, you know?
You do take a little bit of a hit, when your money is not making money essentially when you're holding it in cash, but being in that ready
Yes.
stance.
Yes. If you look at it holistically, I don't.
But having that ready stance when the market does create that opportunity, that's where you're you're having the larger reward for the risk that you were losing a little bit of money on that cash you were holding there.
That's
Now,
the only time I cross over.
yeah,
That's
exactly.
the only time.
Now flip that, and you don't have cash, and the opportunity becomes available. Now you have nothing to deploy. Now that's the flip side, where I think probably 98% of the people find themselves at, is because patience in the stock market is extremely hard. Like I talked with I think it was you, or I know David talked about it, JMac talked about it also, is having patience when the market does turn a little sour like it did last week, and not over deploying yourself in the first place. If you're still in cash a little bit and you're 2-3 weeks into this dip, good on you to have that patience to string out your buys, because who's to say, 20 or 30% more, this could be just the start of it. I wouldn't say we're not into a full recession yet, but who's to say this is not the door just opening into one? So if you've already maxed yourself out and you're sitting at ground zero with no cash to deploy 2 weeks from now, when we have another 15% pullback, then learning experience I would chalk it up to. But again, when you get one of these golden nuggets coming through the video and you don't really take it to heart, saying, hey, don't over leverage yourself in the first 24 hours, which I think a lot of people do. They see an 8 to 10% pullback and they're like, oh man, this is the opportunity I've been waiting for forever. And then you're like, crap, too much, undo, control Z. It doesn't work in life like that.
That's a good point. I would offer the other side of that, right? Is that if you're too careful, this thing may have the potential. Remember, the underlying current here is that this geo risk may actually really affect companies. Now that's my concern. Okay, I think what's going on now, and the illness that people are suffering from, I think that in and of itself is sad. My heart goes out, right? But to put that aside a little bit, the scary part about it is Apple Store closing. The bottom line is, certain pharmaceutical companies are really being hurt by this thing. Real companies, especially those that are closely related to in the cruise business, the airline business. I mean, those are getting absolutely crushed
Slaughtered
right now.
Yeah.
Not sure what's going on with energy right here. I'm about as confused as everybody else. I know Matt Money's in the group here.
I wish he would almost pop in here to talk about the energy, because I've been researching. Honestly, the stocks I've been looking to are the cruise lines, and I've actually started a position in one of them with actually two of the top cruise lines here, just trying to take advantage of what is happening specifically in this market pullback. I think same would be said in 2008 to invest into real estate. That would be where the money is being made.
See this?
Yeah,
that's the flip. That's the flip side. So I guess so it brings me to my point, Jamie, when you're talking about, okay, let's say this thing does continue to slide for another 20 bits. Let's say 20 bits from here is 33% down. That's a prolonged bear market. 40% for me, I would be deploying as aggressively as I possibly could at 40%.
Yeah.
You may get a further down tick to 50%, but that is extremely rare, especially coming off such a heavy bull market and the underlying economy at the time where this threat kind of set in was quite good, right? We can all agree on that, you
Yeah.
know. The real question is, will that affect and maybe potentially derail that 10 years of progress? And the verdict is still out as far as I'm concerned, you know.
I had me and my brother were actually pulling up some charts, just some technical analysis, looking at the S&P and
Yeah.
looking at where it had pulled back last week was, I think it was the same as where we were 2 to 3 years ago. It had almost erased like almost 2 to 3 years of losses. I think the S&P had come up to a certain level and bounced it twice in the highs, and we had come down and met that same level to the point where you almost it was like sideways for almost 3 years with the S&P like that. Looking at that was pretty interesting, and I believe we've pulled back even further off of that now. So again, I'm just deploying money as I normally would, no matter what the market's doing. When you have a long term, into the 401ks, and then the additional money I have after I've already jammed that full because it's tax protected. That's the big key factor there for me, into my taxables. And after the Roth IRAs are full, now I'm being specific and picking these almost little booster stocks, on the side that aren't in the S&P or the Dow Jones, things like that. So your Teslas or any of these cruise lines, possibly an airline right now. The stocks that are just, looking at these cruise liners, their revenue has been great. Their fundamentals are very good. Nothing has changed. And if you were considering buying one of these stocks, like legitimate, looking at a Royal Caribbean Cruise Lines is a legitimate, it's a very decent dividend stock. I had never looked at it before until this stock market now. And I think they had about 7 years of growth, I want to say.
Yep.
I've never been on one before. I've been on a Carnival cruise line, which was, not going to lie, not the most top notch, but I had a great time. But I felt like I was like almost kind of redneck, on there, but it was good. It was a good time nonetheless. But looking at
they just cater to a different audience.
Yeah,
they all
sure.
do. Carnival Cruise Line, Royal Caribbean, and Norwegian. Norwegian is actually one of my favorites, and they do all cater to somebody different, but they're all three. Carnival being the largest, Carnival pays a nice dividend as well. Carnival is by far the largest. And then
I
you've
think
got
they
the
have
other
about
two.
I think they have about 48 or something like that, 48% of the share of the market.
They do.
Yeah, Norwegian was, I think, third largest. And I really wish the company MSC, I went on their cruise. I wish they were a publicly offered company because their ships are very, very nice. I love that. But yeah, looking at these cruise liners can be pretty decent dividend paying stocks as long as this whole ordeal turns around within a decent amount of time.
Think about this. I wouldn't even invest for the reason that you just said. Like, I think you're going to get the turnaround. Okay, let me just concede that. But think about the baby boomers as they're aging. Cruise is one of those things that's one of those super popular things that people do as they age. And as the population ages, I've had the idea thrown at me that instead of going into a retirement home, if you have the means, just
cruise full time.
They have excellent medical staff.
There was a lady. There was a lady on the last cruise I went on. They had a video. There's a lady. She literally cruised year round. Her husband passed away. She lives on the cruise ship. Like, her entire room is decorated with crap. Yeah, no, like she knows the entire staff on the Carnival Cruise Line. And I was just like, you're going to like 6 countries a week. It's probably the same 6 countries, but like over and over. That's awesome. She gets to go dance every night. They dance every night on like 6 different dance floors to restaurants. Like, that's pretty dope. I've never even like thought about doing something like that. So yeah,
for real.
So you didn't say if you're gonna do it or not. Like, you got to make a decision still. Like, yeah,
exactly. For me personally, I don't. With my affiliation, it's a little bit more. I have a lot deeper opinion about the cruise and cruise industry. It's part of the reason why I actually can't really touch it, to be honest with you. It falls into a little bit of that category. So I just choose not to. But I still think they're good. And here at these deep discounts, man, I don't even know what Carnival's trading at right now. The airlines have got to be single digit PEs right here.
Oh, it's like
They've
5.
got,
Yeah. I did
yeah.
one on United. It was 4.8 from I think Seeking Alpha, and I think Yahoo Finance had them at like 5.1 or something, which is crazy because 9 months ago they were at 10.
Wow.
Yeah,
Oh my God.
6 months ago they were at 9. So I put that video out yesterday. That's why I've been doing a bunch of research on the airlines and the cruise liners, and I'm just like, man, even if you don't invest into a cruise liner for the dividend, it's like you have to expect some type of upside capital appreciation. Even if you have a 1 year hold time, just even if you're just like, I'm going to hold it for a year, I'm going to get the long term capital gain on it. I think by then it's going to come back. It's not a bad play. They're just so cheap right now. Like it's one of the cheapest stocks I've ever seen since I've been invested. One of the biggest
Yeah.
discounts I think ever offered. So especially in a 2-week time frame.
Yeah. What specifically, if you don't mind, Jay? I mean, I saw Delta is kind of what's coming to my mind, but I don't know if I'm on the right one there because I don't cover the airlines, nor will I buy them.
No, I looked
I just,
into I did the video on United was the first one I had pulled up.
okay.
United was looking pretty decent. From the video I had done, they had an older fleet of airlines, so they had a lot of capex expenditures. They had decent revenue between that, and then I started a position actually in Carnival Cruise Line and also in Royal Caribbean, just like starter positions. So kind of like we've been talking
Sure.
about. I just
Yeah, 10
initiated,
shares.
10. I think 10 and 1 and 20 in the other. So
Nice.
I still have
Yeah.
money to deploy in the other Roth IRA, and the wife's Roth IRA is almost still 50% unfunded. So still got some wiggle room to have some fun in the market there.
Most
But
definitely.
yeah, seeing these, 16% down in a day or something like that. I mean, dude, come on. You know what I mean? Like, is the company really that crap? Are the fundamentals that bad? No.
I was driving home tonight from work, and I think I lost $1,000 in a minute. I swear. I was like, what happened?
Now, would you rather go back and say, I will let Jamie slap me in the face as hard as he wants, or
Yeah.
I'll take that $1,000 back? Call it $1,000 slap because
God, man.
it's
I
insane.
did. Yeah, because I check it. I turn it on when I'm coming home, and I just I monitor it, and I'm looking, and I hit refresh, and boom, sure enough, $1,000 less. And I was down at 7,100, right about 20
Yeah.
minutes before the close or something, and it came all the way back, roared back 5,000 in 15 minutes. I guess that's more impressive than the $1,000 in a minute, but it's fun to watch. It's whipsawed. It means nothing. What we're
Yeah.
talking about means nothing. And I guess the real lesson for anybody that's watching, for me included, is if you can watch that and chalk it up as really being meaningless, you're more the wiser for it. Honestly, it really doesn't mean a thing.
Easier to watch it go up 1,000 than down 1,000. I think if it went up 1,000, you wouldn't even blink twice. You would just be like, nah, okay,
Fair
let me
enough.
keep driving. And went down, you're like, caught your eye. You're like, what just happened? Because I think, yeah, you're kind of numb to the upside, but you're always never that numb to the red numbers. The red numbers seem to just pop off the screen a little bit more than the green ones. I was warned
See
about
that?
this.
That's a good comment, man. That's a
Yeah.
good comment.
It's exactly what we're talking about. Yeah,
It takes some courage to actually share a comment like that, honestly, but
for sure.
you are not the only one, I'm telling you. And I've got a video queued up that I'm going to release that's going to help out with this topic right here. And that's, I just feel that people really, really need to look at the stock market as an opportunity. Okay, how are you going to leverage that opportunity? And leverage is key. Scale is one of my favorite words in controlling risk. Okay. So just because you have $10,000 to invest doesn't mean you need to take that entire 10,000. It's the same rationale. If you get approved for 350,000 to go buy a home, it doesn't mean that you have to go spend that entire 350,000. It's the same idea, right? It's the same idea with home buying. You have the potential to get overextended. It's the same thing with the market. Only invest what you can afford. Invest what you can afford.
That is
honestly.
called over leveraging yourself, which I have done before when I bought my first house. I literally spent up to the dollar that I was approved for.
Did you?
Yep.
Did you?
And long term, it actually would have worked out. Not to take the story in a different direction, but because I was trying to house hack with it, but still, it was too much. If I was to have lost the roommates, if I was to living by myself, something was to have happened, yeah, I would have been underwater really fast because it was living, right up to my means. I was up to here in debt, which is completely opposite of where, you and I are at today, which easily helps you not over leverage yourself when you have a cash stockpile with zero debt on the side of consumer debt. I mean, it's just so much easier to control everything.
The irony in that too, Jamie, is me and you both are kind of in a position of convenience in that we actually have an excuse to be a little bit more aggressive. What I
Yeah.
mean by that is we have things waiting for us in retirement,
Yeah.
right?
Yeah.
That it is a real luxury. It really is. And that brings me back to what I said at the top of the stream. I'm super thankful for everything, my job, everything. My ability to invest in the TSP really does kind of shape, at least partially, if not a very large part, to how I look at my other investments and how I carve out my exposure in those other portfolios. I don't know if I would hold my Roth IRA 50-50 with passive and single dividend stocks if I didn't have a TSP, or
What
a
would you
401k
what
for
would
the.
you cater it more towards, you think, if you didn't have a built up 401k
I
like
would
that?
I would probably simplify it immensely, and I would have B&D, I would have the S&P 500, I would have a small cap fund, and maybe an international fund. That would be my portfolio, and I would
Yeah.
look to build it up in a large amount. That's the way I would do it.
I really look at the stability of our jobs. I think anybody can probably take this with a grain of salt too, is how stable is your job in line with also how big is your emergency fund compared to how much do you have invested at one single point in time. Because if my job was as easy as not signing a contract and my boss could say, hey, times are tough, I'm letting you go tomorrow, and I don't have an emergency fund set up, I have 2 weeks saved up in bills, you're kind of screwed at that point. You know what I mean? But to
Yeah.
the point right now where I know I have to really screw up in order to get fired. Like I have to do something catastrophic in order to lose my job. Kind of gives me a little bit more ease on, hey, how large of an emergency fund do I really need to have saved up? Because at some point I've had, over 6 months of bills saved up. I'm like, maybe I'm oversaving. At the same point, I'm like, do I need to invest more? Should I taper it back a little bit? So finding that balance there, I think it's not so much a balance, it's more like comfortability. You know what I mean?
Yeah,
At
and
what?
to each his own. People could look at our program. They could look at mine and say, "Ryan, you're too conservative." Oh, okay, that's great. It makes sense for me. I think the real takeaway for people is to understand across the entire spectrum how certain people are a little more defensive in nature and others are a little more offensive in nature, and why on both ends of the spectrum. That's the real takeaway. And then put yourself on the spectrum where it fits for you. That's the takeaway. I would never tell you, Jamie, oh, you're doing it this way, you need to do it that way. Never. First of all, I don't care, right?
Mm-hmm.
Because I would expect that you pay enough attention to know enough about what this community talks about to take little tidbits and deploy it for your own benefit. Like you will win long term. And just like everybody else can also take those tidbits and win with, but it doesn't mean that they're going to take your tidbits and put them to work for themselves and they're going to render the same results for them that it does for you. That doesn't make sense, So what makes sense for me, and that's the irony in the whole thing, is that we probably could, with the situation that we have and the layers that we have in our financial security, yeah, we could probably justify doing that, taking a little more risk.
Yeah, super layered. I think it goes back to say what your last comment was, is thinking what your emotional control is going to be when the time comes. But when that time actually comes, it's game time. It's game time.
Yeah. And that's one thing about, I'm pretty proud of myself. I should have gave myself a shout out tonight after Gen X and Jason, because I'm pretty proud of myself. I've had this discipline for a long time. There was a time when I didn't. And I couldn't tell you when I turned the page. I couldn't tell you. Maybe it's a constant evolution. But I can say right now on this live stream to the 2,500 people that will review this stream after it's posted, I'm not going anywhere. I can say that with 100% certainty, with just as much certainty as Gen X dividend investor, right? He says he shows no emotion. And that's kind of where you want to get to. You really do. And
Hell,
again,
if you're at a 7-figure portfolio and you have not learned your emotions by that point, you are playing with fire. If you have somehow been able, you are not able to get to that level of investing if you do not have control of your emotions, because at some point you will plateau because you will never succeed that dollar amount unless you are making ridiculous amounts of money. To get to that level, you have had to have learned your investing style and taper down some of your weaknesses by that point. He's probably learned his strengths along the way and really played into those as well, and built up that numbness to stock market fluctuations up or down. Not just down, but up as well. You know, I listened to somebody else talk about that yesterday. They said when the market goes up and I make 5-10 grand, I don't get excited. You know, just like when it goes down 5-10 grand, don't get, you know, mad or sad about your account. So it's just like, it's a long-term thing. It's like raising kids. One day you'll see your account and you're like, holy crap, you know, I'm nearing the 7-figure mark. Like, how did this happen? It feels like just yesterday you had $100,000. You know, you don't see the milestones until you're looking for them. 250,000, 500,000, 3/4. You know what I mean? It just kind of creeps up on you. You know, I was looking at that in the 401ks is the easiest thing. It's a creeping of wealth. It's getting rich slow. And then you notice it, you're like, holy crap, when did my account triple? You know, and it happens so fast.
But then you look at the key crossroad in any investor's decision is when you started that account and started funding it with just that little bit. You didn't know where it was going to go. My goal for the TSP, man, was 100 grand. I figured, you know what? When I retire, this is going to be a little overflow, a little slush fund, whatever. I'll do with it what I want, give it to the kids, whatever the hell. I don't care. I'm just going to start it because it's the responsible thing to do, right? Now, after 7 years at 35 grand, that's what I've got there. That's on track to probably flirt with that 250,000 just for the decision of starting it. You know, I haven't missed that 35,000. Remember the rationale I gave at the top of the live stream? Oh, I lost a car this week. You know, I haven't lost that money. I haven't missed that out of my paycheck. Hell, I don't even know what my full paycheck would even look like because I'm so conditioned to paying myself first. You know,
that's huge. Same boat. I actually was in the, you know, for anybody who's not in the military, we have a finance office. I walk in there because my paycheck was messed up and I had no idea what my paycheck is actually supposed to be. So I'm in there talking to the person and say, hey, I need you to tell me what I'm supposed to get paid because I have so many things coming out. I'm paying myself so much off the top. I'm like, I need to have money to go. Like, I almost treat myself like a poor person. It's almost sad. You know, I'm like, hey, I need to have money to go pay off the credit card and buy groceries. Like, you know, here I am doing pretty well. But yeah, paying yourself upfront is, I mean, that's, if there was one thing people took from this live stream is pay yourself first. I mean, that's golden nugget right there. You know, don't invest what's left over, invest first. So I think a lot of people don't know what it means. A lot of people don't know what that means. A lot of times they say pay yourself first and they take it in. They're like, what the hell does that even mean? You know?
Make sure you keep your money away from its worst enemy, yourself. That's what paying yourself means. It means redirecting that money before that paycheck hits your bank account. If you're in the habit of inflow, outflow, inflow, outflow, inflow, outflow, it's your ability to break that habit and on the inflow, channel some of that money to your asset bucket. That's what paying yourself first is in a nutshell. I didn't take that. That's not from me. That's from Joe Carlson, who gives probably one of the best definitions of paying yourself first that I've ever seen on YouTube. It's phenomenal. It's just phenomenal.
He's got some good stuff.
Oh yeah. Good YouTube channel, honestly.
Yeah, I'm excited. Next month is a double pay raise. Me and the wife get a, you know, smaller pay raises for hitting our 10 years or, you know, 10-year mark for me. And
that's a good one.
Hitting 6. So, you know, just knowing that's coming ahead of time and to be able to adjust, you know, right when that happens. And so our paycheck looks like it just does this, stays the same, but our investing goes like this, you know? So it's going to be beautiful. You know, you having another couple $100 a month, I'm going to almost double what's going into my taxable account on top of keeping the same amount going into our tax deferred accounts.
I'm excited for a lot of people that I've come across on YouTube. You're right there at the top. And I don't mean to be condescending, but I know what program you're working. And it's not really a question how or if you're going to get there. It's going to be a question of how strong into seven figures you guys can get. You know, you're young,
Yeah.
you're disciplined, you're doing the right thing. You're obviously, discipline is the key, honestly, and a willingness to want to do it, to speak frankly. And I don't know if a lot of people say that they want to do it, but for whatever reason, and again, I'm not your dad. I'm just a friend through YouTube, right? I'm just a stranger through YouTube. But if there is any little piece of takeaway from this, the quicker you can get over those personal barriers, God, the better off you'll be, man. Just up it on the priority list, just a little bit, and
No, for
maybe,
sure. Yeah.
I don't know.
I know how you feel talking to me because I think how old are you? Almost 40?
Yeah, 42. Yeah, I'm
42. So
42.
you got
Yeah.
12 years on me, but I've got 12 years on the people that I talk to. So it's almost like I'm the middleman here, and I know
Yeah.
exactly what you're talking about. Like you just want the best for people. When I talk to these 18, 19-year-olds that just don't know hardly anything, and when I set them up and they start learning and they show me just a peak of interest in there, that's exciting for me. That's exciting because I wish somebody would have done that for me. I kind of had that when I was going through my technical school after, basic training. I had somebody say, "Hey, we're going to set you up with this, TSP." I was like, "What the hell is a TSP? What's a 401k?" They said, "Well, it's a retirement account. Just go back and do it." And at the time, you're just like, "Yes, sir, yes, sir, yes, sir." You're just like, you're a boot essentially in basic training. You're like, "I don't want to get in trouble, so I guess I'll go sign up for this retirement.
Sign up."
And I hope it's okay." And then here I am, like 10 years later, like I don't even know that guy's name, but I would kiss him right now because I'm so thankful he did that there was one person out of all the people that had a hand in my training that said, "Hey, we should set these guys up with TSPs or with 401ks." Like that was probably the person that looked out for us the most out of all the people that, I dealt with. And so the guys today that get automatically involved with the 401k not even by choice, that they're automatically enrolled in there. They don't understand the power of that. They really
somebody's just doing them a favor right up front.
Oh, a massive favor. I mean, I found a lieutenant actually the other day. I was talking to him and he met somebody. I mean, I think you said the same story. It seems like the same story. 20 years somebody was serving, had their money in the G fund, in bonds pretty much. Like, it's like, how does that happen? How are you such an educated person to be so uneducated in financial independence?
It's a $750,000 mistake. It really is. That's too much, and that's why the TSP changed it. Now they're opting people into the life cycle automatically. They're at least doing that because opting somebody into that is so wrong to do to somebody. If you're going to have them trip and fall into a program, have them trip and fall into the life cycle program and have that professionally managed, get some tax loss harvesting at a very low cost. That's what they needed to be doing. And God, quite frankly, it was really a big blunder. 1 out of 2 people were suffering from that very mistake. 1 out of 2.
It's insane.
Yeah.
Robert, were you?
Yeah.
Oh, sorry.
No,
the question.
We'll just hit this. So what's a good cash amount? I wouldn't necessarily call cash an investment, nor would I call gold or silver, that popped up earlier as well, an investment. But it really is relative. So I can't say if $3,000 makes sense for you, then it's a good amount. Okay. But for me, I've got close to 100,000. That's what makes sense for me right here with the size of my portfolio. So 33% is about where I'm at right now. Maybe a touch less. Okay. So to each his own. I just think the bottom line is you don't tune into my channel or Jamie's to come on and say, yes, this is the hard and fast right answer. I think the deeper meaning to this is have a little cash on the side, because here's the thing. What we do on at least my channel is I really, really try to separate what is traditionally accepted in the investing world. And that is you go in with your first $10,000 to the financial planner, and they're going to recommend that because you're young and because you've got a long time horizon, that you're going to want to invest all that. And that advice works for certain people, not all people. Okay. And so to each his own. It may be prudent in these volatile markets for you to just take 20% of that money. Take 20%. You're going to win long-term as a self-directed investor anyway. Remember, if you've watched my catalog of videos, I give you guys hundreds of thousands of dollars in savings free of charge. Okay. Just by nature of the program, you're saving hundreds of thousands of dollars. So what benefit to you is it that you get overexposed right up front and just invest every dollar that you have? And then you start going through this volatility, and now you're starting to second guess your program. That's not healthy. So I know it's a roundabout answer a little bit. I don't know if you want to take a stab at that on the cash on the side, how much is right, because I don't want to sit here and say that X number of dollars or X number of percentage right, because you can kind of use that to your benefit to flow it a little bit down if you're more aggressive and a little bit higher. Right now, I'm about a third, just to give you a page out of my playbook.
Yeah, it just depends on comfortability, Again, like going back to being over leveraged. If your transmission on your car craps out on you next week, are you going to be forced to pull that money back out of the market? That being the first thing you would not want to do when you're trying to create long-term wealth is the money you are putting into any type of account, whether it be a taxable account, a Roth IRA, or your 401k. When you put that money in there, have the intention to leave it in there until you are retired or financially independent. And when you go ahead with that mindset and you say, okay, I have an emergency fund, essentially, like talking like Dave Ramsey principles here, have that little cash stash on the side. So when you have an oh crap moment, you better have at least $3 sitting around in case something happens. So yeah, it's just one of those things too, what's your job like? How stable is your job? Do you have other money besides that $3,000 sitting around? If you invested all of that, are you living paycheck to paycheck at that point? And those are the types of things that are not going to let you sleep well at night. From my experience, when you're over leveraged like that, you're going to be thinking about that all day when you should be concentrating on other things because you're just so wrapped up into what your investments are doing. And so, like I said, I think the biggest thing is just once you put that money, you deploy it into the market, have the intention on leaving it there forever until you need it, So.
Gen X said it best on that video that I recommended at the top, How to Be a Millionaire. That son of a gun, he says stuff during his videos that I'm just like, God, why didn't I say that? Because it's so good at just summarizing stuff and really watering it down in its purest form and then delivering it to people so elegantly. It's just awesome. That video affected my life.
You know why? It's because you have 10 words written down on your script.
Yeah, exactly. Yeah. Well said. Well said. Yeah. But what he said on this very topic is when I invest money, I forget that it exists. Any dollar that I invest, it's as if it's gone. And what he said was, I treat my investment dollars the exact same as if I take my wife out to a restaurant and I spend the bill. That money I'm not getting back. I approach it in the same manner. And I thought, I've never really thought about it that way. In all fairness to myself, I've never really thought about it as it's gone.
You do subconsciously, you do that. That's why you have 33% sitting in cash right now. Because if you didn't view it as gone, you'd say, at some point, I'm going to have to take that out if I don't have cash on the side. You subconsciously thought about that. You just didn't voice it onto a YouTube video. But I can guarantee you that's exactly why you have cash on the side, is because
maybe you're right.
You're planning to never take it back out once you put it in. No. It's just, I think it's in line with what Jack Bogle said. Jack Bogle dared somebody to invest for 20 years in an index fund and not look at it. What's Mike saying?
It could be prudent for some people, honestly. That's the whole thing about defining that spectrum, I think, is what's important, and I love it. I love the different opinions because for me, I'm always cross-checking and asking myself, am I right? Am I wrong? But here's the thing. I've just gone through a few hard life lessons in my life where I did not have cash. And that's not a cool feeling, man. And I just won't go there. And I just, man alive, I'm so fortunate. There's just people in this world that aren't so fortunate as me. So you're not going to hear any type of comment from me to say, I should be doing this, or I'm going to stress out about this or that. The ability to lose $18,000 over the last couple of weeks is a luxury.
That's a first world problem. That's exactly what that is.
Well said. Well
Yeah.
said. And I don't want to be part of a community that, is like, oh, we need to do this and that, and I'm not doing that and this and that. It just, man, investing in and of itself is something that I believe everybody should do, full well knowing that there's a lot of people who cannot do it. You've got international viewers on your channel too,
All the
Jamie, that
time.
come on your
Yeah.
channel and they're like, I would kill to be able to do what it is you guys have the opportunity to do, and many of you don't even do it.
Yeah. That's the sad
Many of
part.
you,
That's the
that is
sad
the
part
sad.
when people are more knowledgeable about what we have than the people that have it. I got Australians coming in all the time. People from, I think, England,
Yeah,
talking about
India's another
Roth
big example.
IRAs, buying fractional shares, having all these different available brokerages, zero commissions. I mean, there's just so many things that are available right now, and to not care about it, it blows my mind. You care about things that don't matter. Care about something that matters. To me, this matters. This is my family. This is not just me. This is not just an investing account. This is my kids.
Legacy.
When
Legacy.
you think about it like that, it really is.
Do you?
Oh yeah, for sure.
I've known you a while now. If you truly
yeah.
mean that, that's one of the coolest things I've ever heard you say.
Yeah, I mean that's why the kids got a custodial account right now. I grew up without that. I didn't have the money. I didn't have that.
Nor did I.
Paid for college the whole time. I was delivering
Amen.
pizzas, still living at dad's house, paying for community college. Air Force paid for the rest of my degree up there, but never had big handouts like that. And to be able to give my kids something like that is amazing. And hopefully he can do the same for his kids. And the accounts to pass down, man, I don't think nobody in my family has that. A lot of people say, oh, I'm self-made, or, I never had anything handed to me on a silver platter. But can you imagine if you had like $1 million account given to you and you just pulled the dividends from that account your entire life, and you're able to just keep passing that down over generations, something along those lines? I think even better than that is the knowledge. That's something that was never really taught in my family.
I would never trade the route that I've went on. Never. I didn't come from money. I've worked for every penny I have, man. I can remember me and my wife, our bank account was an envelope in the dresser drawer. We started with nothing, and we've built everything we have. And for people who just heard what I said, they could probably look at us and they know I'm a single income family, and go, wow,
dude, that's remarkable. Like you were talking about that. I mean, you're talking about your stance just 10 minutes ago, and that thought literally crossed through my head, because I knew that about you, that you're single income, and what you have achieved there shouldn't be taken lightly. For the people out there that are single income, I mean, you got 165 people watching right now. I can guarantee you, at least half of them are probably single income, wondering, can I do what this guy is doing right now? Yeah, and you did it. You've done it.
Yeah,
you're doing it.
And I will say this: the real key to that is perspective. Honestly, when you talk about somebody who's got that $1 million bestowed upon them, that's great. But I just don't know if you have the capability mentally to appreciate that. I just don't know. I hope I'm wrong. I don't think I am. That's why I wouldn't trade anything. I know where I'm going to be destined in my future,
Yeah.
And this community probably means a hell of a lot more down the line than it means now. I look at this community as an investment. I really, really do. Why do you think I'm so adamant about doing this every Friday? I don't take Fridays off. I don't, because it's that freaking important. And I know some people will look at it and be like, 2 hours, Ryan, man, that's crazy. Nah, man, it's not. It's a drop in the bucket for where my perspective lies and where I think this thing could go in empowering a bunch of people that are part of something really, really special.
Yeah.
Really special.
You know why I come in here every Friday? I'll be real. My 2 hours spent is more like 10 hours spent, because there's so many other opinions and knowledge bombs coming in that I literally could not spend the time out there researching when somebody else is out researching ExxonMobil that I didn't look at all week. And I was looking at a cruise line and they dropped something and I said, oh crap, I had no idea, that sector of the market was doing that. But because there's so many minds, quote unquote, minds in motion coming through here, it's just, you like what I did there? Yeah, it's pretty awesome. But yeah, to be able to have, probably the accumulation of, I would not even say less than 500 hours of stock market research coming through 2 hours of live stream right now. You know, when you have a couple hundred people in 2 hours coming through and injecting their 2 cents on what they saw the market doing, where they were at during the day of trading,
Yeah.
it wasn't the same as yours, and it wasn't the same as mine. And if you learn just a couple things in that time, that's better spent than watching a Netflix movie, in my opinion.
That's just amazing what people will justify with their time is what we're talking about. But to go
Yeah.
one further, what people will justify with their expenditures. I kind of talked about it at the top of the live stream. You know, it's much more, I guess, politically correct to go out and buy that depreciating asset as opposed to justify a good sound retirement account, that of which you can control by scale. Honestly, you don't have to take that 18K and dump it in the market, but do something. Getting people off the launch pad is the hardest part. But I don't want them off the launch pad if they can't end up in space. I don't want them off the launch pad. I don't even want them to start, you know?
Well, right now people probably feel like if in this specific week in the market, people probably feel like whether they're buying a new Mustang or a share of Johnson and Johnson, they're both kind of depreciating. It's probably their viewpoint on it. But the difference is one of those is going to turn around in the future and come back, and one is going to keep costing you money until it doesn't drive you anymore. So
hold
they're
on.
essentially, they're both vehicles, right?
If you're an investor and you're a new investor and you've been watching this market kick some tail over the last 10 years and you're
Yeah.
like, holy smokes, I missed it to 30, and it didn't hit 30, it ended up boom, turning on a dime. Why would you look at it with that perspective instead of looking at it from a different lens and saying, maybe I'm giving my shot a little bit. At least my entrance now is better than it was at 29.4. You see what I mean? Nothing in what I just said is speculating that the market's going to Dow 15,000. Nothing. It just is what it is right now. It's at 25.3. That's where it is now. It was at 25. It was at 29.3. Now it's at 25.3. Why is that less attractive now? Why is it the justification to say the market's going down, therefore it's less attractive? You see what I mean? And
Yeah,
I know you're trying to answer it the way that through the lens of a new investor, but I'm giving that long perspective on it. You know what I'm saying? I'm really trying to offer that.
I think the newer investors, they get the feeling of throwing their money on a campfire. That's really what it feels like, you know.
Okay, I can appreciate that analogy.
I think that's how somebody would feel right now when they see, you know, a lot of people just think the stock market is gambling. The stock market is just where you go to lose your money. It's like going to the casino. So when somebody sees like that and they're able to say, hey, Ryan, I told you so, you shouldn't have done that. And now you're like, I lost my, you know, my car, my $30,000 or whatever today. They're pointing the finger at you, but you know, in 6 months, you're going to point it right back at them and say, ha, no, I told you so. So
perhaps
maybe
he's got a nice headset on now, man.
He upgraded.
I heard that. You got your sound on? You on, man. You live. Welcome to the Independent Investor Channel live stream, man. I got you on, Junior Stock Investor. You got me okay?
Yep. Can you hear me? Can you hear me okay?
Yeah, we can hear you loud and clear, man. Awesome.
Gotcha.
I want to give you this opportunity. Take the floor. It's yours. I want you to be able to speak to the community and kind of let them know, you know, what you get out of investing, how long you've been investing, you know, where you look to and why the heck you invest, which is one of those rhetorical questions I throw out there for everybody. I'm always interested in hearing your answer as to why you do this gig.
All right. Well, first of all, I'd like to thank you for having me on your channel. I know it took me a long time to get the headset, and I'm actually I was using my girlfriend's laptop, but it wasn't working. And
nice, man.
I'm just thankful to be on the live stream. I've been watching you since October. That's when I actually started investing.
Nice, man.
Nice.
So, to be honest, no one ever taught me about investing. I just started watching your channel. Also Ryan, Ryan
Scribner.
Yep. Yeah. That's actually the first time I met you on the channel was on his. So I follow him. A couple other Ali stocks as well too. I follow
absolutely
Graham Stephan, I believe his name is.
Yeah, Graham's solid.
Yeah. So with me investing, I'm or right now with the market, I'm not even scared. I only have a little bit in, and as a first-time investor, when I started in October, I was actually in the bull market. So I actually, I think my first week investing, I was already up like 6%.
You
So,
bet. Yeah.
yeah, because it was towards the end of October, towards November, and then at one point, I think the highest I've got was 13%. And of course, last week with the market, I was down all the way at 13% and wasn't afraid at all because I was like, you know what? I'm learning from
You
reading
are.
books from Warren Buffett and your
Yep.
channel and everybody else. It's you really can't have any emotion in the market. It's the only
I
way to
did.
win.
What's your
So,
name? What's your name?
oh, I'm sorry. My name is Junior, and I'm from Jersey. So,
Nice, man. You didn't catch my channel when I was over there on Staten Island?
I was
I,
actually by New Rochelle yesterday. So
nice,
I drive a truck, so I was delivering out there, and I actually
nice.
heard we had yesterday two people, well, obviously with the illness, up in North Bergen. So
Oh
I want to
man.
Ugh,
give my prayers out to
for real.
anybody that's been affected, any family members, friends. Um,
No doubt.
I know it's a scary time now, but we'll definitely get through it as a country.
It's
So
it's like I don't know, man. It just speaks to the reality about life and there not really being a perfect life, you know. And I just think sometimes people let a lot of other things that are life issues get wrapped up in their investing thing. And that's why I'm steadfast, man. I do believe that investing in and of itself is fairly shallow, honestly. It's a great revenue generating, it's a great wealth building tool, but if you're sitting there in front of the stock market for 9 hours a day, you need to find something else to do with your time. Honestly, your money's
yeah,
working for you. Your money, Junior, was up 13 at one time. It's down 13 now. Ever since October to now, March of 2020, every single dollar that you have there's been working for you, whether or not you like it or not. It works when you're sleeping. It's
oh
going to
yeah,
work. It's going to work into your future. And if you can just abide by a couple very simple rules, man, and that's kind of why I asked you, like, why you invest. That's one of the most important things. Like, if you have a wife, spouse, kids, whatever it is, if it's just you, know that for yourself, what type of time horizon you've got and why this little blip of volatility is just that. It's a blip on the radar, man. It will pass like everything else. And I agree with you. I hope it passes to the extent where it affects as little people as possible, you know? But I tell you what, man, the world is it's an interesting place. And I always like to hear a little bit different perspective as well. I know my message goes out worldwide, and that's why I try to keep it as holistic as I can because, I mean, I'm married to an international gal myself, you know? So I do
yeah,
have some level of acknowledgement to how things are so much different. This investing gig, man, it's challenging. It certainly is, but it's also very, very rewarding the longer you do it. That's for sure.
yeah.
Junior,
Do you
Well,
I got a question for
oh,
Junior real
I'm sorry.
fast.
shoot it?
Okay.
So with what Ryan just said, I think it'd be fair to ask, do you invest for time?
As far as like
So like long run, right? Like I think myself, Ryan, and we're both family men. I'm not sure if you have kids and all, but like down the road, my personal opinion is I invest for time because I want to be able to buy my time back and have the most of it in the future because I'm not worried about money in the future, right? To the point where,
Yeah.
I'm not worried about a paycheck coming in because I'll be financially independent to where time is the most valuable thing, not the dollar amount in your bank account. That's what I'm investing for is more time into the future for a little bit of sacrifice right now, So,
Well said.
Oh yeah, absolutely. I mean, I'll just give a quick background. The reason why I actually started investing or looking into investing is because I hate my current job right now. I absolutely hate it. So
it's being
I'm a
real.
truck driver and I
Yeah.
deliver oil and antifreeze. And my
Yep.
job
Okay.
is I started in April and it's brutal. Like I was working 60 hours a week and I was absolutely miserable. And I don't have any kids. I have a girlfriend, which I plan on marrying very soon. That's why I'm actually not
Ooh.
putting any money to the market now, because if I
Congrats,
do,
man. That's
thank you,
awesome.
man.
Awesome.
So,
Good stuff, man.
um, So I wanted to. I had to find ways to just think, because I have a long-term perspective. So I like to think of things that I can do from my time as to generate money. Because with this current job I have now, it's not obviously a job that I'm going to retire from. So just I did a I did just started looking at YouTube videos and just learned everything on my own. I actually started with putting money in high yield savings account. Um, I started
Sure.
learning about that, and that's actually where I kind of started learning from investing, because I keep forgetting his name. Stephen Graham, is that his name? Keep
Graham
Yep.
forgetting
Stephan,
his
yeah.
name.
Yep.
Yeah, he talked about high yield savings account, and I thought to myself, I'm like, wow, all these years I've been putting a large amount of money in these regular banks, which it's good to have for an emergency fund, but for
Mhm.
the long term, uh, they don't have any high yield interest on these accounts. So I
That's right.
started looking into different banks, and I actually have CIT Bank, which at the time was at 2.4, but now with this interest cuts is now like probably 1.3. But that would
Yeah.
obviously eventually go back. And from that point on, I realized like, okay, what are other ways I can do to gain passive income, and just learn about the stock market, dividends, learning about positions. Literally just learned everything online on YouTube, and I watched
Wow.
different people in their channels, and obviously when they talk about the same things, talk about blue chip stocks.
Yeah.
I don't do any speculative stocks, so I have Johnson and Johnson, I have Visa. I actually opened up a traditional IRA and rolled over my old 401k and picked individual stocks. So I have Facebook Realty
Wow.
Income. I also have
Yep.
LTC Properties. So those two stocks that generate monthly dividends. So
Yeah.
I'm in my early 30s. So for me,
He read my
Yeah.
mind. I
it's
was gonna ask him that. I was gonna ask you your age. He read my
yeah, I'm
mind.
30. Yeah, I'm 33. So for
Nice.
me, I realized like if I start now,
Yeah.
in the long run, and especially with these stocks that increase their dividends for 50 years. So I finally realized what a dividend king is and a dividend aristocrat. It only makes sense
Yep.
to invest in those, because if they've
Hell
been
yeah.
growing their dividends for that long, I don't see them cutting their dividends anytime soon. So
Junior, think of each one of those stocks that you're talking about as their own individual businesses that are going to pay you quarterly. Some of them pay you monthly. And when you look at them in the short term, it's like, man, this just doesn't seem like it's moving. But God, think about all those investors out there that are doing what you're doing. But think of all the people who don't invest at all. That money's making
yeah,
money for you when you're sleeping, man. When you're out working and you're earning that paycheck, that money is duly working for you while you're out on the road doing what it is that you're doing. And that's the same way I look at it. When I'm at work or if I'm sleeping, it's doing that.
yeah,
It's making that money behind the scene. And over time, it really starts to magically compound because you've got a pile of time. You've got 3 decades before you're still young at 60. Man alive, can you imagine when you're 60 looking back on this decision to join this group and others, and that impasse of
yeah.
going from a non-investor? Man, it's life-changing, man. It's freaking
Well,
life-changing. It's powerful.
I was telling my girlfriend, and I'm actually teaching her a lot of things too. So that's why I'm actually glad to be on this channel, because sometimes she loves to hear it, and sometimes she gets annoyed. She's like, "Okay, enough's enough." So because I don't really get a chance to talk to
Yeah.
a lot of friends about it, and I
Awesome.
think the biggest thing that people should have, I think what people do miss when they don't invest, is the mindset. Number one is the mindset, right? Because
Yeah,
a
man.
lot of people have short-term interest, right? Like, oh, I need this money now. I need to get, this X amount in like within the day or two, or within a week, and they value other things like materialistic things. And I think that's the issue with a lot of people that I talk to about investing. They get bored quick. They're like, oh, I don't care about dividends. How much is dividends? They only give you 10 cents or 20 cents, or I'm not, or like, per share. I'm not interested. They don't have
Super
that right
short term.
mentality.
Oh man,
Yeah.
that's
Yeah.
really short term perspective. And one thing you said too, Junior, like it's okay to anticipate unexpected expenditures. It's okay to expect that life is going to happen. So what do? Are you going to cry about it, or are you going to be proactive about it? Start putting away a savings, start eliminating debt, start doing all those other things that don't have squat to do with investing. You know what I'm saying? Get your head right. Make yourself
Yeah.
healthier. I say this all the time on the channel, man. Investing is not going to supplement for all of your other deficiencies in life. Get your diet right. Get your health and well-being right. Get your spirituality right, and investing is just going to be a small addition to your total overall health and well-being, man,
Yeah.
but man, if you justify things in that short of a wind tunnel, it's going to be tough, man. Those are going to be the folks that look back over their life at 60 and they're not going to have time anymore, like Jamie's talking about, and that you start to introduce some regret. I tell you what, man, when I look back over my life, I want to be like, you know what? If I fail, I'm going to be fail trying. That's it. That's it. I'm not going to be that one that looks back. And I understood at least a small or a large part of the opportunity in investing. And I'm going to be like, what little bit or how much I knew, I still chose not to do it because I thought I was smarter than everybody else. Forget that.
Yeah.
No way. I won't walk that.
I would say investing is a marathon, not a sprint. So, like I said, people have short-term, perspectives on, I need to get this money, within this week or within this day. And the crazy thing is, we're living at a time now, zero commissions, zero trades. That is a huge plus.
Yeah.
Thank you.
Like,
Yeah.
you know what I mean? Like I've only invested since October, and I couldn't even imagine back then, like if I wanted to invest, let's say like maybe 5 years ago, right? Not too long, 5 years ago, I would have to put, at least 3,000 to 5,000 down. I would have to, know that I would have to pay trades and commissions every time. It's crazy now with, Robinhood M1. I don't have Robinhood, by the way. I have M1. I actually almost did Robinhood, but the only reason I didn't do take a platform in Robinhood is because they don't offer IRAs, and that was huge for me because I knew that
That's
to
good
open up
enough.
a Roth or traditional, it's important. I mean, I'm not hating on anybody that does Robinhood, good for them. But M1 Finance offers that, and fractional shares are a huge plus, especially if you're a beginner. You can put a little bit of money in, and it won't affect you as much. Like say if you for Amazon, instead of buying $2,000 a share now, you could put like $100 in, and just dollar cost average that way. So,
Junior, one of the biggest things I could probably tell you too is just starting in October, you've grasped a ton of the staples of investing that people don't pick up on sometimes over a year or two. Like you've learned so much of the good stuff too. And what I would suggest to you from my knowledge right now is look at your tax situation now and look at your tax situation 30 years from now. So you're doing that a little bit already, probably, indiscreetly with the IRA there. There are two types of IRAs. So I'm sure you're aware of the Roth IRA and the regular IRA, and your company might have a match, but just know how all those play and have a future plan on how you're going to take the money out, your exit strategy. Be building your exit strategy now while you're putting in over the years, because don't get to the end and say, I don't know how to cross the finish line. That's a mistake. You cannot make that throughout your entire career, because if you're putting into a non-good tax account, then you're going to pay a crap load of taxes at the very end of your career. This community has a couple very wealthy people in it that have well into the 7-figure range. You'll hear them bitch about taxes all the time because they wish they could have gone back to me and your age and prepped their income throughout their entire working career into tax sheltered accounts. So putting into your and your future wife right now, you guys can be stacking away $12,000 a year and letting that grow for the next 30. And then when you pull that out, age 59 and a half, it's not taxed. That's the beauty of it right now. So definitely spend a little bit of time on that. I spend a lot of time on my channel talking about tax planning. So along with what you're doing right now is phenomenal, man. But yeah, tax planning is good.
Just to put it into perspective a little bit, Junior, let's just assume right now you're starting from zero. At 30 years old, all right, 30 years old, I'm sitting at about, I'll just use my account for an example. I'm right at 100 grand, okay? I have tripled the account in the last 10 years. So to give you a realistic mark about where you could be at 40, right? If you contributed 6,000, which is the maximum, let's just say that remained consistent. And I hope it doesn't. I hope they actually figure this out and actually do away with or extremely raise that contribution limit to the Roth IRA. They're talking about something similar, but they're missing the point. All they have to do is raise the cap on the Roth IRA, and that would make a lot of guys like myself and Jamie very happy. But if over the next, let's say 10 years, you just straight contributed to the market 6,000 a year, you're talking about 60K of just baseline contributed dollars with zero capital appreciation. All right. So think about the power of that being going from 30 to 40 and having 100K or more. All right. I'm doing the quick math in my head, and you're way over that $100,000 mark. But man, $100,000, that's some serious capital. And me personally, I've done what I just explained times 2.
Oh,
I've been
yeah.
married 15 years, right? So I did the same thing for my spouse, right? 100K in each account.
And then God willing too, if we have kids, I told, my girlfriend that we're gonna teach our kids about wealth, and I want to do generational wealth, because my parents are both Haitian, so I love my parents. They worked hard. They
Exactly.
they came to this country with nothing, and they bust their ass, and I do love them, but I don't want to go through that same route, because I feel like there's other ways to make money without, working as hard, and I want to teach my kids that too. So it's just, I'm excited, man. I'm excited about the market. I watch not only just YouTube channels, but I watch the, was it CNBC? I watch those guys. They're very dramatic. So anything they say, just do the complete opposite. It's
They are.
absolutely hilarious.
They are.
So
They are.
I like watching that, because
I watch the ticker tape. I watch CNBC. If I was stuck on an island and I could only watch one TV channel, that would be the channel I would watch, because there is a lot of knowledge there to be had. You just got to filter through a lot of garbage to get to the good. You really do.
Oh, yeah.
And I do. I watch the ticker. Remember the old school ticker tape? For you guys that watch CNBC in the old school, that was boring. So when they actually went to this new ticker tape where they actually give you the actual ticker symbol, that was legit, because they used to give you the orders. They used to give you the orders on it, and it was it was so terrible. But I was devoted, man. I was devoted. I'd sit there and watch that stuff and be like, wow, cool.
I think it's around 1 or 1:30. They have a couple of them. They'll talk about certain stocks, and they'll have like the halftime reports. So I watch that, because they'll have
those guys and gals are awesome.
Yeah, because they'll have people like us, like they're allowed to like answer some questions. So it's pretty nice. But then when they talk about other things, they can be very dramatic, and it's hilarious. Like I know a lot of them short certain stocks, so they'll talk negative. Of course, Tesla, Facebook, they talk negative. That's why I picked up a lot of shares of Facebook in my traditional RA when they had their last earnings report, when they went down. I just went up and scooped about a good 30. So.
I'm blown away. I'm blown away at what Junior's already done. Rolled a 401k into an IRA.
Me too.
You know how many people don't even know you can do that?
Oh, well,
like,
two
seriously.
reasons, right? Well,
no, like for real, there's people I know that don't even touch their 401k. They're like, yeah, I worked at a job like 20 years ago, and it's still sitting there.
Yeah. So
in that
that's the thing.
High cost mutual fund. Yeah.
Yeah, and that was the thing. Like the current job I have now, I didn't want to roll it over to my current job, because I don't know how long I'm going to be there. So I didn't want to go through that whole process of that. And also too, just learning different channels. I was like, you know what? I like to have control of my money and see where it's going to, and then put it in blue chip individual stocks. Visa, like I said, Facebook. Those companies are not going to go away in the foreseeable future.
No.
Well, I don't think they are. So
no, they won't.
And then when everything settles, if it could be. The market could go down another couple weeks, 6 months, almost a year. I want to be faced by it, because eventually it's all going to go up, especially with these companies, and it will be fine. So
Junior, how long did it take you to get the courage to be like, I think I'm knowledgeable enough to transfer this 401k into my IRA? Because I bet you if you started that right when you were like, I don't know jack crap about the market, I'm going to wait. Let me read like 17 books, and then maybe I'll be okay to transfer my IRA over. Because that's a big move, man. Like for real, to go from like mutual fund investing to like, I'm going to individually pick stocks. And you pick some really solid ones out there.
Thank you, man. I appreciate it. It only took me about a month, because the benefit, even though I don't like this job, the only benefit is, like, since I'm a truck driver, I do drive far. So every morning I start at 5 in the morning. I put on certain channels. I'm not watching them, because I'm driving, but I'll listen to them on my headset. And if I'm driving an hour and a half, 2 hours, that's the advantage that I had, because the ample amount of time to listen to these videos, because I'm by myself. So I have to count my blessings, because if it wasn't for this job and my frustration, I'll tell you what, I never would have thought about investing whatsoever. I would have thought about maybe a high yield savings account and just did what everybody else is doing. More
You,
majority, you
you
know.
know who else listens to that kind of stuff driving the car? This guy.
Yeah.
You watch his account go down $1,000 in a minute. Oh, hey.
That's
Yeah.
right.
So,
You see
but
that? Hey, Junior, you're
yeah.
getting it. You're getting a fan base here. You realize that? You see what I'm popping up here? So I've got some folks that are at as Quest to Fire. She's super awesome. She's a channel creator herself, and she's a member of our community. She's asking why you don't start your own YouTube channel. You ever thought about it?
No, I never did. I don't know.
I
Well, I
literally
guess maybe
thought
the
that was
first
your
thing is
channel
time.
name.
Yeah, that's what I
Yeah,
thought too.
Yeah.
yeah. I mean, I've got certain I've talked to certain people, you know, during the community. And then I think the coolest thing was the one that I like to watch is Ali. His is very informative too.
Yeah.
So he
Yeah.
breaks everything down. And he actually gave me a shout out, and I thought it was pretty cool, because I don't have
Solid.
my picture on my channel, or I don't even have a channel, but on my user. But it's awesome, and I think what I like about this too, everybody helps each other out. So it's not that
I'm all
famine
about it.
mentality. Yeah, it's
Nah,
everybody
man.
helps each other out. You know, it's
Nah.
not a Ponzi scheme. It's awesome. So this is the
Yeah.
way to
I
go.
I guess for me, and I've been pretty vocal on this, and I started 3 years ago. I've watched some YouTube channels that I started with really explode. Nate O'Brien is one of them. Is really good. He's 21 years old. I've seen Joe Carlson, who just started recently, explode.
Yeah, I follow him.
Ryan Scribner, of course, was one that started. For all the people that I've seen really explode, and I've been stoked to see it, especially Ryan. We kind of got close. He had 6,000 subscribers when we first met, and
Wow.
super sharp guy. But I think what sets those folks apart, and I would put Nate and Whiteboard Finance as well into some of these categories. Their message really does kind of try to transcend and reach people. If I get a sense that you're doing YouTube for your own personal benefit, 100%. That's going to turn me personally off. Okay. Now, I understand doing some YouTube and making a side hustle for yourself and getting paid and compensated for your time, et cetera, et cetera. But I think you can do both. I really do.
Yeah,
And I really do take very seriously the potential of somebody tuning into either mine or Jamie or this live stream right now and hearing something that either you or me say and look to benefit their life and empower and improve their lives. And I take that really seriously, man.
yeah,
You talked a little bit about the old school a little bit. I'm 42, and this opportunity didn't exist when I started investing. I was paying $50 per stock to enter into stock when I started. $50, not 7, 50. And I always tell my Duke Energy story, and I know I've said it many times, but it's worth repeating. In a managed account, I paid $50 to enter into Duke, and you think that's the end of the story. I paid $300 to exit the position because I was up $1,700 on the position. And because I made money, took all the risk to execute the trade to exit the position, I paid $300 broker commission to exit that position. $350 for one buy order and one sell order. Right now, just like you said, Junior, we do that for free. Not to be
yeah.
overstated, it's huge. It's huge.
And I think that's I mentioned that earlier. Like a lot of younger people that are not taking advantage of the situation of not having to not pay commissions or trades is a huge plus. I mean, and you mentioned this. I think you mentioned this a couple weeks ago. How you said Robinhood is a distraction, right? Because they're not showing
I,
these kids
I
about
mean that.
retirement accounts.
I mean that.
You know,
I'm right.
yeah.
Sorry.
And you saw what
I
happened
know.
to the stock. Well, not the stock. The platform was a couple days ago when it went down.
Yeah.
I want to apologize. I won't
Yeah, it's
apologize. Look, man, there's 10 million people last I checked. I don't follow Robinhood. For you, Junior, what you said about it not having retirement accounts, that's a done deal for me, quite honestly.
yeah,
And I'm actually going so far right now is to make people think twice about discount brokers. M1 Finance is the one that a lot of people really like. I have 2 accounts with them. I like them. It makes investing fun, but you got to ask yourself, there's some deficiencies. The one elephant in the room with M1 Finance is the one trading window. That is unacceptable. I'm sorry. And I don't beat around the bush and say it's the greatest thing since sliced bread. Any broker is going to get you direct access to the stock market. You can have that access with Fidelity, which was voted the #1 broker in 2019. Or you can opt with an M1 Finance. Whatever's going to suit your needs the best, that's for you to decide. But it absolutely is in everybody's best interest to be honest with the pros and cons of each platform, because it is a big decision, and you should choose right so it stays with you for the majority of your investing career. You want to kind of stick and stay a little bit, because it's a pain in the neck to have to change back and forth, you know.
Well, you have to pay extra, right, to get the second trading window. Is that correct? With their M1 Plus service?
Not
Yeah, that's
acceptable.
see.
Not
Yeah,
worth it, man.
I don't want to.
No.
Yeah, I know. I definitely don't want to pay. So it's just, I mean, I really do hope that they do change that in the future, because with I know there's always going to be some negatives with certain platforms, but I do like M1 because, especially for the beginner and fractional shares. Apparently Robinhood you have to have a waiting list, which I think is kind of stupid. But with M1, I
What?
like that they have.
Oh, man.
Well, yeah,
Junior, you're
they have a
killing
waiting
me.
list, right? With fractional shares. So that's what I heard. I don't know if
Oh
it's true or
man,
not, but
you're probably right. Hell, I don't know. I've always been, and I caught a lot of heat when I came out with my Robinhood sucks video. I caught a lot of heat, and I'm right. I don't care that there's 10 million cows that invest with Robinhood. I don't care. And again, you can use Robinhood to your benefit. If you're after a taxable broker, Robinhood can work for you. Okay, it can. But not everybody. As a matter of fact, I would argue that the vast majority of investors need to fill up that tax protected capability first. Then, if you want to invest in some surplus capital using a Robinhood, a brokerage account, then it can be justifiable to do so. But even then, you know, by the time you get to that point, honestly, why not just open up a taxable broker with your major? That's what I did. I mean, I've got 4 taxable brokers, and none of them are with Robinhood. 2 with M1, 1 with First Trade, and 1 with Merrill, Bank of America.
I'm kind of right there.
I'm happy.
right there though. I'm the transition in between you two right now. I got an M1 account also, Junior, which I've got my taxable account in and my Roth IRA. But I just opened up a Fidelity account for my kid with a custodial account, and I have future plans to move the Roth IRAs over to Fidelity. I could tell you there's some things in there that are just amazing. The research tools, having limit orders, you could do stop losses, all that type of a little bit more advanced, not just like day trading, but just the options. When you say, okay, I'm going to buy this stock at a certain price, I'm not paying $1 more than that. You just set yourself a quick limit order. And if you say, I'll get in when I get in, and I'm not paying $1 more, but you do that with M1 and you're stuck at buying whatever, I'll be real with you. I bought Tesla and I had the plan. I was like, I'm going to get in at this round dollar amount, and it got in at $50 higher.
Yep.
In the same morning.
At 10:30. Yeah, because you fall victim to that 10:30 trading window, right? And here's the thing: it kind of pigeonholes you in. And I've been very vocal about this. The way that you defeat that M1 lack of opportunity is to be very passive with your investments. Okay, so it doesn't quite matter, but that's real money. That's real money you're talking about, Jamie. And here's the thing: if I invest in Tesla like I did in M1 Finance and it ran up 125% like it did, I would have sold it. But I was stuck. Exactly. I was stuck in a taxable account. I couldn't sell it, right? So not only am I up huge in a taxable account, now I'm pigeonholed into this passive philosophy, and I really can't do what I like to do, and that's swing trade opportunities if the opportunity presents itself. And that would have been absolutely one that I would have taken off the table gladly, up 125%. Now I'm only up 77% because I didn't get to sell. Right, that's just one of many.
So he says only 77. Just to note, that's 77.
And I'm angry.
Solid.
Hey, but the real takeaway is the point of that exercise, right? You don't. You should have the full suite of opportunity with your trading and your opportunity with fractional shares, and be able to take profit at your leisure for free, full service brokers will do that for you. Fidelity, TD
At zero
Ameritrade, Charles
extra
Schwab,
cost
Merrill.
though too. At
Hell,
zero extra cost is the
zero.
reason. Now,
Zero.
even if they charged you every month, and I'm not saying like a percentage of your portfolio, but like a flat fee, $50 a month to use this broker, it would still probably be worth it. And that's why I moved my Roths over, because you can trade in and out. So every time you sell Facebook shares in your Roth IRA, or he sells Tesla and takes 110% profit, as long as you leave that money in there, it's still
Tax
not
protected.
taxed. And now, that's why if he is up 120% on Tesla and he wanted to sell it today, and tomorrow went down 27% because it's a volatile stock, he lost out on that. He could have sold out today, buy back in 2 weeks when it drops down $150. You can literally, that's swing trading, and that's why having a Roth IRA is kind of fun, because you can trade within it, and you have this big roof over you deflecting any capital gains tax.
That's
so
right.
It's kind of the best
so
account to swing trade in my opinion.
It is.
Yeah, and that was one of the things that I opened it, because I wanted to raise my own capital without even putting any additional money into it if I was up a certain position at a high mark. So, which I learned from, obviously just seeing other videos and why people. So, of course, in the tax protected, because with a taxable account, you don't want to be doing that because you get hit with short term tax.
Well, what are these 10 million people doing in Robinhood then, Junior? Do they know something that I don't know? Okay, so then tell me I'm wrong. Look, if Robinhood came out to incentivize trading, and they don't offer retirement accounts, then every single one of these people are trading in taxable accounts. And I can tell you that's a nightmarish bill to get from the IRS, when you just think that you can go on there and trade and quit your day job, and you've racked up 300 or 400 or 500 trades in a year. Let me tell you what, that's a hell of a tax bill. Trust me.
Yeah.
Not good, man. Not good.
Yeah, we'll see what happens in the future. I mean, maybe down the road, I'm sure they'll have to, because I'm sure people are going to be, saying things, and, it's like I said, I love M1, and
It's awesome.
I think it's important for beginners to even, try it out. And then retirement accounts are huge, especially when you're young. And a lot of people put it off to, like, I'll worry about it, or, not really control their investments. They'll just, have it. And indexes are good too, especially if you're not the type of person that looks at, I look at like Seeking Alpha, especially for dividends. I look at the history, balance sheets. I actually, my buddy actually, I'm actually invested in his company stock. The ticker symbol is OLED, Universal Display. I gotta get the name of it.
I know.
But they so they make flat screen TVs, the screens, and the iPhone screens as well too. So I actually got in a couple last week at 150, and the stock was at its record high at 230. And just looking at the balance sheet, one thing I liked about it was they had very little debt. So just doing things like that, I'm always interested in. But some people are not interested in looking at balance sheets for individual stocks. I wish I would have looked at AT&T more back then, because I didn't realize how much debt they had as far as long term or short term. But again, it's the yield is a good yield, so I was like, I'll just sit on it.
AT&T is good. I prefer Verizon in the space. That's just my opinion.
I have both. I have both Verizon, because they both good. I think Verizon yields at like 4%, and
AT&T is like six or so.
Yeah,
both good income stocks for sure.
Yeah, they are.
Yeah, and they're not really volatile stocks. They don't really go up and down heavy like that. Barely even move. So
AT&T stayed at 30 for a really long time.
It did.
So
sure did. Hey guys, I might be thinking of winding it down. I like to keep it around 2 hours. Honestly, I could talk for another 2 hours on the stock market. But I want to thank both of you guys. Junior, thank you so much for coming on, man. You're welcome here anytime. I think that's freaking awesome. I hope you stay with us, man. This community is pretty long standing. I really do. I meant what I said. I look at it like an investment. I really do. And I totally value the relationships. It's a good way to bring people together that you probably wouldn't have met in your day-to-day interactions. You know what I'm saying?
Yeah.
It's pretty awesome.
And I appreciate, thank you, Ryan, for letting me on, and thank you,
Anytime.
Jamie. And also too, when I was telling my girlfriend I'm gonna come on, she was like, "Don't show your face." So what are you, crazy? Like, why are you talking to people on YouTube? I'm like, "No, it's legit. I've been watching the channel." She
Oh
was
yeah.
freaking out. She was like, "Please don't talk to people. Like, just hide
They're
your face.
gonna
What the hell's
kill
wrong with
you.
you?"
No.
Yeah, she's like, "What the hell is wrong
Yep.
with you?" And I'm like,
Yep.
"No, this is legit. It will be fine."
Hmm.
So it's not like I'm gonna drop, where I'm at. So I told her I would hop on, and again, I want to thank you, Ryan, for this opportunity,
You're
and
welcome.
just continue to spread the word, man. You're really doing something that a lot of people are not doing.
Yeah, man.
Um, you're very passionate about it. You're not charging people. It's
Nah,
awesome,
man. Nah, never
and
will. Nope, it's not
and you're
about
doing
that.
it, and I know you're doing it from the heart because you love to do it, and that's the huge thing.
I
Love
do,
what you're
man.
doing.
I
So
do, man. As long as we're making an impact. I love doing it, but I'm not going to do it if we're not making an impact. That's the end result, honestly.
Junior's your living testimony that you are making an impact. I
Amen,
mean,
man.
oh, thank you,
real
man. I
words.
appreciate it.
It was
Yeah,
nice to
man.
meet you too, man. I'm gonna pop out of here. My
Yeah.
bottle has gone empty, so I need to make a refill.
Awesome. Thanks,
All
Jamie.
right,
Really
guys. I'll see
appreciate
you
it,
guys
man.
later.
All right.
All right, guys.
Peace.
Good, man.
Cheers, Junior.
All right, take care.
You too, buddy. Awesome. So we put another live stream in the books again. Certainly want to give another shout out to Junior, stock investor, for making his way on. And Jamie spent the majority of the live stream with me tonight. Really, I'm in debt. I went on with JMac Investing and Wednesday with Jamie as well. Just enjoy the heck out of talking to Jamie. So big help on the live stream tonight. I think it makes it more enjoyable, to be honest with you. But to have somebody like Junior come on, actually, that started to follow my channel since October, and is just kind of working through some of those initial deliberations in the stock market. That's real talk. That's real talk. He's not the only one to go through those deliberations. So if you are one of those new investors and you can relate, quite frankly, with anything any of us said, but specifically that real talk, man, that's pretty cool stuff, because I was there. And there's not an investor out there that's going to tell you that they just jump in and they've got it all figured out. All right. I think the idea is to learn as much as you can to where your comfort level is at a place where you want to go ahead and introduce a little bit of risk to the market. I'm not one of those guys that's going to come on and promise that you're going to have a pot of gold at the end of the rainbow. All right. The volatile nature of the stock market has obviously been proving itself true over the last couple weeks. And I'm glad. I'm glad, because it gives people a holistic opportunity to ask themselves, is this for me? And if it is, how is it that we can get the most opportunity that we can by taking on as little risk as possible in the market? And there is a sweet spot in that answer for you. There really is. So we'll continue on with the message next week. Honestly, same forum, same kind of setup a little bit. I do send the invitations out through the Facebook group that I run through the Independent Investor channel. I do share it through my Facebook page as well. I want to thank all the community members. I tried to highlight as many of the comments as I can for you guys. Honestly, I want to make sure that we're organically building the community. And what I mean by that is the channel creators that come on that are trying to build their independent messages as well. I'd like to see those organically grow over time. Because again, what I said during this live stream, I mean it. I really do. I treat this opportunity as an investment here in the channel through the growth and prosperity of the people who come on and look to consume the message. So with that, guys, we'll enter into another week. I'm sure next week will be no shortage of information flow to the investor. We're going to continue to monitor, pick our opportunities where we will, but most of the time, I think just holding fast is really where you want to put the majority of your efforts. Just enjoy being an investor, okay? It truly is one of those great luxuries and great ways to build wealth over the long term for you and your family. So with that, guys, I will sign off. Have a great weekend, and we'll catch you next Friday. Take it easy.